And now it's time to start with our first panel here, and I'd like to welcome Benedikt Vaupel on stage, who's going to host the first panel. Welcome. Benedikt is a blockchain expert at Bitkom, and his panel is about crypto between removing stumbling blocks and becoming mainstream. Welcome.
Thank you very much. So, hello everyone, and a very warm welcome also from my side here at the Digital Finance Conference 2022 to our first panel on this stage of this day. And the next 35 minutes will be about crypto. And Professor Dr. Wuermeling has already said it. Looking at decentralized finance, there are a lot of challenges ahead before we can really say that we go forward and that decentralized finance and crypto will become mainstream. So our panel is titled Between Removing Stumbling Blocks and Becoming Mainstream. I think this is a very fitting title for what we have heard yesterday and what we already heard today. So we will dive now into the current state of the market and discuss if and how Europe and Germany can become major hubs for the crypto scene. So my name is Benedikt Vaupel, and as project manager for all things related to blockchain, I'm responsible to guide you through our panel and, of course, to introduce our panelists. And I don't see, we have one panelist, Katharina, Gehra, coming up on the screen. So I will start with, where is he? Oliver Fußwinkel. Oliver Fußwinkel is... You have the choice all yours. He's head of the Strategic Division on Financial Technological Innovations at the Federal Financial Supervisory Authority, which most of you probably know as BaFin. And his current priorities include regulatory and supervisory implications relating to crypto assets and decentralized finance. And he also helped to regulate the crypto custody business and was head of the Council Working Group during Germany's presidency in 2020, working on the markets and crypto assets regulation. So, welcome, Mr. Fußwinkel. Second, we have Kristina Walcker-Mayer, who is CEO and former CPO of Nuri, also formerly known as Bitvalor. And with over 10 years of experience, of digital experience, Kristina has worked at different startup unicorns in Berlin, where she led product teams at N26 and managed Zalando's mobile apps. Welcome. And then Peter Grosskopf, who is the CEO, the co-founder and CTO of Unstoppable Finance, a Berlin-based company with the mission to empower people around the world to access, interact with, and unlock the financial opportunities of the decentralized economy. And before that, he was CTO and MD at Börse Stuttgart Digital Exchange, and also co-founder and CTO of Solaris Bank. Peter, welcome. And last, but definitely not least, I can see Katharina there. Can we maybe get her? Yes, there she is. Katharina Gehra, welcome, co-founder and CEO of Immutable Insight, an innovative startup from Germany, providing reliable insights for investors and traders. And she's also an all-around expert on all things blockchain, having been invited to parliamentary hearings at the German Bundestag. Welcome. So everybody's sitting down. I will also sit down. And let's have a look at the first half of 2022. So, after the all-time high of Bitcoin with nearly 60,000 euros and the DeFi total value locked of over 100 billion US dollars, looking at the numbers now, we are basically back to where we started in early 2021. Bitcoin around 30,000 euros, total value locked in the DeFi space around 55 billion US dollars. However, the sentiment, besides all the things that have changed geopolitically, the sentiment in the crypto space also seems to have changed a little bit. And it has become a little bit more negative during the last months. So the question to start off would be, is this the beginning of the end, or at least a prolonged bear market? Or is the crypto market just consolidating, maturing, and getting ready for the next all-time high? And I would say, Katharina, you are the furthest away from us, but here with us digitally. So you can start, please.
Well, first of all, hello to Berlin. I was happy to be there at least last night briefly, but I'm very happy to join this panel virtually. I think when we think about the price as the only indicator of the blockchain technology or mass adoption, then we would be very short-sighted. It's much more than just the price. And I also like to say that back in October, when we were at an all-time high, that we should all be humble, because price reactions are not really the best indicator of what's going on. I do think if we look at last year in July, we also were at a low point, and then back in October we had an all-time high. There is an element of hype, and then there's an element of fear that comes after the hype. It's almost like the cold turkey after all the endorphins that have been created. So if we only look at the price, we're gonna be miserable. And so I don't think that's the look we should take. We should look at the actual numbers of transactions. We should be looking at the number of developers. We should be looking at the number of smart contracts that are being deployed. And of course, we should all keep building user experiences that people will like to use and will use more often. And that's really what mass adoption is all about. The price is just a second order effect, and the transaction and the usage is what really drives this technology.
I would absolutely second Katharina here. I think in the end, markets are cyclical. And I think specifically the crypto markets are even a bit more dense, so if you wish. And therefore, I also believe like we have ups, we have downs. It's about really understanding the long-term impact, the long-term possibility of a complete new industry, also of Web3, of decentralization, of creating efficiency in the financial industry overall. But then also we're usually coming a bit more from the consumer side as well. I think now, especially in markets when they're cyclical and going downwards, it's more important than ever, again, to really focus and foster financial education, which is not very present in even economies like Germany, to make the mass consumer understand how to actually navigate and invest through cyclical markets. Because I think what we see now a lot in the news is this kind of negative sentiment that you also describe. I think creating further fear does actually the opposite of like supporting the mass now through those phases, because in the end people do not lose money if they do not pull out the money. So that's why I think it's also very important now in terms of the communication to have kind of a kind of objective, neutral view on like how cyclical markets work.
And I would even add to that, so there's one quote from the crypto industry, which is called, "The best products are built in bear markets." And it's referring to, for example, when there was the big bear market in 2018, kind of the whole decentralized finance movement was created. So kind of it was very silent around all the blockchain projects, and kind of like MakerDAO, so kind of releasing the first algorithmic stablecoin, if you want to call it like that, was implemented. And then a lot of protocols really saw live and really going live. And therefore, I think this current bear market will again be used to really help to mature the whole industry and build the products that we will see in the next years.
Yeah, not surprisingly, I couldn't agree more actually, because looking only at the price would imply that we are looking only at investment assets. And I think the crypto market is much more. It's not only about crypto assets, it's about the blockchain technology, it's about tokenized economy. And it has to be measured not only in asset prices, which of course are part of a green and fear cycle. It's a highly volatile asset, as we can see, as we have always warned about. It's especially for us unbacked crypto assets, of course. But from a supervisory perspective, of course, we also have to look at numbers. We have to look at transmission channels, value locked due to financial stability reasons. We are constantly assessing, together with Bundesbank, of course, and with international regulators, whether there is an indication of financial stability being affected already or not yet. So far, we don't see larger implications, but especially looking at certain stablecoin arrangements, we have to be very vigilant about this.
So sticking a little bit to the topic of mainstreaming, of the hype that has been happening, I think one of the things that was a narrative during the last year was also that established players and banks are joining the crypto space or are entering the market, or at least showing interest in this area. And last week I've read that JP Morgan now has declared that it is replacing real estate with digital or crypto assets as its preferred alternative asset class. So my question to you is this already something where we are witnessing the move to mainstream? I recall 2 weeks ago at the BaFin Tech, there was also a lot of talk about DeFi. So are we already in the mainstream right now?
I think it's always the question, like, how do you define mainstream? I sometimes speak to crypto-focused investors that tell me like MetaMask is a product that is suitable for the mainstream, which I would highly disagree with. I also believe like DeFi and so on, like, and all the tools we're using are definitely not mainstream. But do we see more and more mainstream interest in like, what is crypto? How does it work? Like, what is Bitcoin? How is it different from Ether? Why do I need a wallet? Like, how does it even work? I think we absolutely see there's a need in the mainstream for different types of investments. And also just like basically securing like purchase power, if you wish, right? I mean, I think Bitcoin in general, like being kind of the digital kind of gold equivalent is something that people, something like that, are seeking for. So I think, yes, there's indeed like a big mainstream interest, but are we there yet? Even as a mainstream product, as we call ourselves in the crypto space, I wouldn't say that everyone owns crypto as of today.
Yeah, and I would also say that there's different waves of adoption, and so because you always need to question kind of where is the demand at, and where do the people really become interested in. And I think the first wave was kind of, or like wave zero was, Bitcoin was invented like as to invent a decentralized payment system that is kind of like built on algorithmic trust. And then there was the first wave, kind of people were realizing, oh, these crypto assets were raising in price. Okay, let's trade it. And like a whole trading industry was created. So with like Coinbase and all the centralized exchanges, also the Börse Stuttgart projects, plus also then the whole ecosystem maturing, for example, with the German crypto custody license also being implemented to kind of also to supervise the markets. And for me, there's now the next wave coming, and which is decentralized finance, and where also crypto really gets back to its origin, kind of not being used to create assets that have like questionable backing. It's really used for financial services being created. So kind of also what you can get from a bank, like a loan and money transmission and so on. And I think it's the banks really become interested in having crypto assets as a trading instrument, and I think that's pretty fine. And I think this will take again a few years that also banks will get interested in decentralized finance, because I think also like the risks behind it are different. So therefore, so it will go in these waves.
I would agree. Maturing is the word. There is increased institutional interest, but important building blocks are missing, especially from a regulatory side. So we do have a crypto custody business regulated, but we all know MiCA is still in the trilogue phase, and it will impose important rules for the whole European space. We have anti-money laundering initiatives still not in place yet for crypto, not fully in place. So I think for a mainstream product or for mainstream adoption, we need more legal security, and that would need a bit more regulation, especially for institutional players, but also for consumers, I should add.
Mm-hmm. So I think you've already touched upon this topic. So if we're talking about centralized finance, if we're talking about decentralized finance, we are also, of course, always looking at regulation and how we can approach this. So whether it be the crypto asset transfer regulation in Germany, or the MiCA that we have already heard a few times being mentioned, but also the TFR. So I think one of the questions that the industry always has is, it's great that there is regulation happening, but the nitty-gritty parts of what regulation is applied and how. So maybe, Katharina, coming back to you, one of the questions is, are we applying old rules to new technologies?
Well, first of all, I'm fighting hard to get out of the nitty-gritty of regulation and put it into a broader perspective for the token economy, particularly because I don't think it's actually worthwhile just putting small, tiny bits and pieces into missing loopholes. But in general, I do think we need to acknowledge one thing, and that's paramount, I think, to all the discussions that we have. We are in a phase where we come from, let's say we have a horse and somebody invented a motor, and we are in a new form of mobility. And that's a little bit the same with blockchain. Blockchain changes so fundamentally the way how we can do payments and finance in general. The whole token economy is so much more than what we have just today. So we need to think of a normative framework that actually identifies how do we do identity? How do we do transactions? How do we do ownerships and wallets in that new world? And then from that target model, we would then need to find the right frame that also works with our legal basis, with our values, and then we can fill in the blanks. But I'm cautious to say we should do a little bit of this and then a little bit of that. We're not going to put a saddle on the car. It's just not going to make sense. And we need to acknowledge that there will need to be an element where the only fundament is the values and the constitutions that we have, and how do we interpret that into the new world. So it's a bit of a pain, that exercise, and it requires particularly all the lawyers to think fundamentally different from a different angle. But it's something that's very important to me and something that I push for a lot, because I do need or I do want to see that we can achieve the token economy here, and that we can actually manage to reframe away just from is Bitcoin good or bad, because that becomes fundamentally an ideological question that leaves aside all the potential that the blockchain provides as a technology to anything, to finance, to industries across the spectrum. So that, I think, is the more relevant question.
So you touched upon a few of the topics, and I want to bring discussion to Mr. Fußwinkel again, because I think as the regulator, how do you see the way forward for BaFin in the sense that there's new technology like blockchain, like DLT, and also the very fast pace of the whole crypto community of decentralized finance, of all these things that are happening very quickly, and how does the regulator approach this? How do you see this topic?
Well, how does the supervisory authority approach this, I would say, because regulator in Germany is a bit broader, of course, because that would also imply that we have a ministry in place, which actually makes the rules, most of the rules. But coming back to us, I think we have recognized early that all of these innovative technologies, and it doesn't stop at blockchain, actually, as Mr. Wermeling pointed out, need a proactive approach, need early understanding, need dialogue. And for that purpose, we have set up an innovation hub already. We did not set up a sandbox for good reason, a national one, and especially not a supervisory one. But for the rules stated by Mr. Wermeling again. I think by this dialogue, by this fintech dialogue, by the innovation radar, which informs our leadership with relevant information on strategic steps to be taken, I think we are well poised to identify the major risks and not to get bogged down in all these nitty-gritty questions, which Katharina already just mentioned, because it's easy to get bogged down in recent events, in press releases, in whatever just happens in the crypto or AI space, and losing the big picture, because that's really important for a tokenized economy and for regulation, seeing what needs to be regulated and what needs to be done to be sure that we're on the right way. And to be a bit more nitty-gritty, we just I think a few minutes ago on Twitter, actually, we had a statement that we released an informative paper on the new, what's it called, electronic security registry requirements. And we are trying to inform the public quite early, warn about dangers, and also engage in discussions with you, with stakeholders, to see where we need to go, basically.
Yeah, I think the challenge for the regulator, and well, so we've discussed a long times already about that, will also come within these waves, because when we're talking about the crypto assets and being a tradable instrument, so this kind of like this business is still very close to what we know from regulation, for example, from KWG, right? So there's like a custodian and there's a marketplace, and so this marketplace, there's a broker, and there's some financial advice, so on and so forth. So in the end, these roles still, it's new products, but the roles match to the traditional roles in regulation. And now talking about the next wave, about decentralized finance, suddenly the roles disappear. So there is no broker, there is no MTF, there is no custodian anymore, because the people do self-custody with unhosted wallets. That's a little bit the difficulty, that the regulator needs to ask, okay, who do I regulate, and how should I do it, and how do I apply the ideas of regulation to it? Because the rule-based approach that's mostly taken, for example, also with MA-Risk, BLT, and so on, are not applicable that easily, or maybe only parts of it. And the other aspect about like the role of the regulator in the future, from my point of view, is that due to this new technology, and that it's kind of like creating new kind of financial services, also the role of the regulator needs to change. And so I was pointing that out on BaFin Tech 2 weeks ago as well, that potentially the regulator will need to build up smart contract audit capabilities, because if you create a new financial service, kind of the smart contract, which is deployed in a distributed network, it's like a mini bank by itself that's running autonomously. And in the end, after deploying the smart contract, you can't change the smart contract anymore. So therefore, there's the opportunity of doing an audit already before deployment, and really looking into it, is the service that is offered on the website. And it's like regulation is always about customer protection mostly. So there is some service offered on the website. You can really look in the code and verify that this service is really delivered. I think this is the strongest customer protection in financial service industry that we've ever seen in history. So there's that opportunity, and furthermore, as this financial service then is completely automated, so no human intervention in there. I think there's also the opportunity that maybe 60% of the rules that we find when building up a bank or when building up a regulated marketplace could really get scratched from the regulation, because us humans are manipulating, we're tricking, or we're doing fraud, we whatever, try to get the most out of us for us, and therefore we have controls and controls on controls, audits. Actually, we also need to audit the auditors so that they do their job right. And therefore, I see this opportunity that with 100% automated financial services that could be audited before going live, and then kind of like being watched like in real time, that offers a huge opportunity. And so I hope that we can really keep this dialogue and also really bring the technology and the regulator there.
Just a quick chime in, if I'm not robbing the opportunity for you to say something, but we will be engaging in a workshop, I think next week on DeFi. As far as I remember, it's next week. And I think on DeFi, there's a lot of possible solutions. We don't know it yet, of course, and we have looked very closely at that topic also during the MiCA negotiations, where it is similar to NFT, that has been a big topic, and I think the approach taken is somewhat sensible so far, because in knowing that we have a moving target, we have a lot of open questions, the regulators have so far abstained from putting up clear rules on there, and I think that's the correct approach, actually, because if you don't know what it is, you shouldn't be too early in regulating, because then you're stifling innovation. So, and also, we just have to make sure that we're not too late, looking at Terra Luna, for example, so that no risks realize themselves, which would also impact real economy or even the financial sector.
Thank you. So I think one of the aspects that you both now mentioned is so supervisory authority, but also the developers of how you can approach crypto and consumer protection from this side. But I think what's also important is the whole idea of educating people about crypto, about the big advantages, but also, of course, about the dangers or the challenges with crypto, with DeFi. So how do we do that? How do we create regulation, but also approach it from the other side as the crypto community, and maybe also the supervisory authority, to educate people about the risks, for example, with Terra Luna, with 20% APY in a year. So maybe that's unsustainable. Kristina?
Yeah, I think also when we in general like say crypto and then we speak about stable coins, I think there's so many different use cases and different projects out there. There's different types of assets out there. I think we need to be very clear and also differentiate a little bit more between the use cases and the offers which are out there, because they bear different risks, might have different use cases. And I think this is obviously where the education starts, instead of like putting everything in one box. The second part is as well, I think we also as a consumer-centric company, I mean, we're all about consumer protection. And I think, as you also said, I mean, regulation in the first place is about consumer protection. But then again, like if there's so many rules and regulations around how you can actually offer financial products these days, that we usually have to offer one page, which is actually the compliant way of communicating this. And at the same time, we have to make another column where we explain what it actually means in like human language. I think then there's something really, really off. And I think this is, again, where I also would, for our own customers, would expect a little bit kind of a more balanced type of communication. What do we want for? Because it's always like in the end, if it's a little bit of black and white communication at the moment, it's like crypto is bad, everything else is good, like putting your money in a savings account is the best solution, without warning our customers that they actually lose purchase power every year, right? So I think in the end, like education needs to go a little bit both ways. And it needs to be done in a way that it doesn't create fear, but also shows opportunity.
Maybe
I would actually really like to give a very good example from my work. We with Unstoppable Finance aim to bring DeFi to the masses and to offer a product which is very easy to use. Okay, so that's the pitch. We were also thinking about, as we've been working in regulated companies before and really know a lot about regulation, and we also don't believe that it's nonsense. So therefore, we also do this dialogue with BaFin and other regulators. And so we were thinking, okay, so there's this new kind of financial services, and this might be new to many people when they download our app and start investing. So let's have a survey, kind of like in the beginning. So like we know from when investing into securities, you need to make this risk check, kind of like saying, do I know about like whatever financial product? Yes, no, and then like the banks have to ask for this information. So we were thinking about something like that, but let's say like in a much better way. So like really like posting questions and really examining how much experience the user has in investing into DeFi. So then we talked to the lawyers, and the lawyer said like, oh, okay, wait. So this might be some sort of financial advice. So we really advise you not to include such a survey, which is kind of a great feature for the user. But kind of the legal told us don't do it, and I think this is a good example also where so we're now in this limbo situation. Kind of it's unregulated yet, but there's also uncertainty for companies like us offering a product. And I addressed it also after BaFin Tech to some BaFin people that for us it would be really also a step forward, really opening the conversations and kind of maybe having a sandbox for such a feature. Because it would be valuable for both sides, for us and for the customers as well, because it makes the customers happy, so they don't invest into something where they might lose money or where they might be disappointed afterwards. And maybe also the regulator, in collaboration with us, would collect some important information and data so that we could eventually use for some questionnaire in the future. And so therefore sometimes regulation really has leads us into defects, but I think we need to keep a dialogue and really be open for different solutions, because then we can really improve for also the customer's sake.
But maybe we also need to invite the BaFin to our usability tests and just hear it right from our customers, because I think what we currently have to do is not necessarily like helping our users, you know, and maybe that could be a way to kickstart the collaboration here.
A lot of it is harmonized, of course, obviously. So our range of operations is somewhat limited, but open for dialogue. So happy to accept that invitation. But I should also say this is not a crypto problem per se. We have a few aspects on when we looked at robo-advice, for example, earlier on, in how far you can pose questions without proposing investment advice, for example. So it's a common problem. I would say it's a very cautious approach to say that you couldn't pose questions. So it is generally possible, just as an ad hoc answer. Yes. But Also, I should say we see aspects of behavioral finance here, which has to be looked a bit closer to have a better and more modern approach on innovative information of customers, especially, and also on early information. And I don't think that BaFin alone could solve this, because what we do need is, I think, early on, financial literacy and also technological literacy. And it's this can not only be done by the supervisory authorities. It's a task that would need more players to address, for example, customers already in school, maybe. Because I do know from a colleague who had held a speech in a school with, I think, 12, 13-year-olds, and half of them had already invested in crypto assets. Of course, not much. But where you can see that this information needs to be disseminated very early in order to take effect. And then we can maybe step back from this paperwork we have so far, because I do agree, it's to a certain effect it can be ineffective, and it's a very old-fashioned approach. Everyone knows that. And also, I should add, because you mentioned Terra Luna, we do try to have a sensible approach. For example, in February, we renewed our warning, but I think we did try not to say crypto is bad, but said, look at crypto assets, look at stablecoins, look at DeFi. There are certain risks, operational risks. It needs a cautious approach, both from the consumer, but also from institutional actors. And looking at stablecoins especially, everything what stands in our February warning has realized itself in the Terra Luna incident, I'd say. Just as a good example on, it's not all fake what we are saying, so sometimes we have good reason to be a bit cautious.
Yeah, I understand that. And I think what you just mentioned about the financial literacy, that would work very well to get together also with the BaFin and the Bitcoin blockchain and crypto community, and use the Digitaltag, which we also have this month, to really educate young people and the whole society about crypto, about what is important to know. But I also want to bring Katharina back into the discussion about education in the general sense. Do you have any adding remarks to this?
Yeah, I mean, I think from where I stand, my primary passion is to share why I think this is so interesting. And we'll have a general mindset that even when we discuss about Aktienrente or equities or investing in general, there's this strong German feeling that there is something like security. So building on what Kristina said, we're at an inflation rate of 7.9%. The one way to lose money or purchasing power 100% is just to keep it into the account. And it doesn't matter if the negative interest rates go up from minus 50 bips to maybe zero. You still, and it's a compounding effect, right? Inflation is just as a compounding effect in your purchasing power loss as an interest rate gain would be. So if you look over the past 30, 40, 50 years, and I always love to share the Aktiendreieck, you need to acknowledge that the only safe way to lose money is not to invest. And yes, there are risks associated with it. And the more we teach and the more people know, the better. But the fundamental truth is, if you have your money in a bank account or in any type of financial product, and I don't want to blame different parts of the asset management industry, although I'm known to do that from time to time. If you make less than inflation, you lose money. And we think we can sell trust and we can live off the fear of the people, but 85% of most insurance or life savings programs haven't net made any money for the client, but they've made a lot of asset managers rich. So we need to change the overall narrative. And then crypto is one part. But again, blockchain and token economy is a whole different spiel. You can invest in different parts of the infrastructure. You can invest in different applications. You can invest in different coins. Soon there will be more tokenized assets. Blockchain will change all the asset classes. It will change the whole process. So we need to be clear when we use the terms. It isn't all crypto. Bitcoin is just one part of the story. And all these things need to be repeated, because in media it will be reduced to whatever blockchain is Bitcoin. And that is factually wrong. And it's misleading. And there's a massive opportunity We have demographic change, we have productivity losses, we will have higher energy prices. But this, the whole token economy thing, that's an opportunity to actually grow, create value, make money more than the inflation. And I think this part of the story also needs to be told, and it needs to be told with a common mindset and not with too much legal risk and disclaimers and fear, but just, you know, how you would explain it to your own parents or to your siblings or to your friends.
Thank you very much for these pretty much closing words right now, because we've already run out of time. And I would say we have, because there are a lot of talks today and the next panel is approaching fast. So the 3 keywords or buzzwords that each of you want for the audience to keep, to remember, 3 words. Not more. From the very left, Peter.
Oh my God, 3 words. Well, I would say DeFi, stable coins, and staking.
Thank you. Mr. Fußwinkel.
Trust, governance, and sensibility.
Thank you. Kristina?
Crypto isn't blockchain.
Very good. Katharina, your
Then
last 3
I'll
words.
finish it up. Token economy is so much more than crypto.
Not quite the 3 words, but thank you very much. Thank you all for being here, for our great panelists. I think a big round of applause for the panelists here in the room and in Munich. And then thank you very much.